In this video, we'll practice creating a balance sheet, which is the first financial statement in accounting. A financial statement is a formal record that summarizes a company's financial activities and overall position over a specific period. The balance sheet is particularly important because it highlights what a company owns, assets, and what it owes, liabilities. The balance sheet equation follows a simple principle: assets equals liabilities plus owner's equity. This means that a company's assets can come either from the owner's personal funds or from external financing, such as loans from financial institutions. For instance, if I want to purchase a home worth $1 million and I only have $200,000, then my asset, the home, is valued at $1 million. My personal contribution, owner's equity, is $200,000, while the remaining $800,000 comes from a mortgage, liability. Alternatively, if I pay the full price of the asset from my personal accounts, say I have $1 million, the equation simplifies. Assets, 1 million, equals owner's equity, 1 million, meaning there is no liability. Owner's equity, unlike physical assets, does not exist as a tangible resource. Instead, it is determined by subtracting total liabilities from total assets. Now, I have an exercise about how to create a balance sheet for you. Imagine a restaurant business. I'll illustrate it using two different formats, and I'll explain the reasoning behind each. The first format looks like AT, dividing the balance sheet into two sides, assets on the left and owner's equity plus liabilities on the right. This visual representation helps clarify the equation and reinforces the concept that both sides must remain balanced, meaning the total value of assets must always match the sum of liabilities and owner's equity. Let's break it down together. The alternative format presents the balance sheet in a vertical layout, which is the standard format used for sharing financial information with external users, such as shareholders. When preparing a balance sheet, the first step involves three essential lines. The company's name is at the top. The title of the financial statement, which in this case is balance sheet. The date represents a snapshot of the company's financial position at a specific moment. For example, the 30th of September, 2024. Unlike an income statement, which covers a period, a balance sheet captures a company's financial standing at a particular instant, like taking a picture of its assets and liabilities at that moment. Categorizing assets and liabilities. The next step is listing assets and liabilities, categorized as follows. Assets. Current assets, which are expected to be converted into cash or used within a year. For example, cash, accounts receivable, supplies, inventory, prepaid insurance. Long-term assets, also called non-current assets, which have remained in use for multiple years. For example, equipment, buildings, land. Liabilities. Current liabilities, which must be repaid within a year. Long-term liabilities, such as mortgages or bank loans, which typically take several years to repay. For example, a mortgage spanning 25 years or a bank loan requiring 5 years for repayment. Owner's equity, unlike physical assets, does not exist as a tangible resource. Instead, it is determined by subtracting total liabilities from total assets. This structured approach ensures clarity when presenting financial data, making it easier for stakeholders to assess the company's financial health. Let's move forward with building the balance sheet step by step. Steps to create a balance sheet. The first step in preparing a balance sheet involves writing the company's name, the title of the financial statement, in this case, balance sheet, the date, which provides a snapshot of the company's financial position at a specific moment. Next, we begin listing assets, the left side of the equation, starting with current assets such as cash, accounts receivable, supplies, inventory, and prepaid insurance. The first line should include a dollar sign. Intermediate values do not require dollar signs. Once we calculate the total current assets, we move on to long-term assets, compute their total, and sum both categories to determine total assets. The total at the end should also be marked with a dollar sign. Now that we've calculated the left side of the equation, total assets, the balance sheet should reflect an equal amount on the right side. Liabilities section. We begin with short-term liabilities, applying the same formatting rules, dollar sign on the first line. Next, we include long-term liabilities, calculate their total, and sum them with short-term liabilities to determine total liabilities. To compute owner's equity, we subtract total liabilities from total assets, following the formula. Owner's equity equals total assets minus total liabilities. For instance, the company's owner contributed $102,000 from personal funds, while the remaining financing, totaling $93,300, came from loans, mortgages, and other financial sources. Now, when we sum liabilities and owner's equity, the result should match the total assets. As demonstrated, both sides are balanced, which is why it's called a balance sheet. Alternative balance sheet format. In the vertical format, we follow the same process, but without the T-shape layout. 1. Begin with current assets, then list long-term assets and compute the total. 2. Proceed with liabilities, starting with short-term liabilities, then long-term liabilities, and calculate their total. 3. Compute owner's equity, using the equation total assets minus total liabilities. 4. Finally, add total liabilities and owner's equity to confirm that the equation balances. This format presents financial data in a structured vertical format, making it easier to interpret. Regardless of the layout, the goal remains the same, ensuring both sides are equal to maintain a balanced financial statement. And that's how we learned about creating balance sheets and calculating owner equity. If you enjoyed this video, don't forget to hit that like button. It really helps the channel grow. Share this with your friends who might love this too. And if you haven't already, subscribe and turn on notifications so you never miss out on exciting new content. Your support means the world to me, and I can't wait to keep bringing you more.